All right, highlight of the day we had, and this is why it's important to pay attention to news or be around people that are also paying attention to news. And it was right in here. Let me move along, move along, move along. Right in here that the headline came across that the defense secretary said, just reiterated, they've been clear if attacks against U.S. personnel in the Middle East don't stop, we will respond. Now, that's not super bearish, but it's not bullish, right? And it's like if you're looking for downside anyways, this could help be a catalyst. And I don't think it was coincidental that we pretty quickly started down and had a little follow through. And it was right here that line dropped down the wire. And it's certainly better to know as you get into this business, if you're around the right people, what is driving the market, what could change, what could be considered a surprise. And on this particular day, it's the first day of a 2-day Fed meeting. You don't have to understand the central bank like an economist, but as or even a financial advisor, but as a trader, there's certain ways and things you have to know on how sensitive the market will be to certain rhetoric that comes down the wire, whether it's from our central bank or another central bank, and what kind of effect anything is going to have on the market that you're trading. If you don't, then you have an empty box, or you have a check in the column of disadvantages. If you think about advantages and disadvantages as a checklist that you would have at trying to be successful, that's a big check in the disadvantage column. And again, I was brought up kind of just, I backed in to being around people that prepared you for economic numbers, prepared you for understanding a central bank and understanding what rhetoric comes out of a central bank that's important and how it changes and what's a surprise, so that you're not surprised. So right now, obviously, the markets are a bit sensitive to U.S. engagement in the Middle East. And so that, while it wasn't like knee jerk bearish, like to sell the hell out of it, it's certainly not bullish. And I think that reaction was tied to that comment. And it's better to know that, but then also understand how sensitive the market might be to that. In 2 weeks, if things were kind of like calm and nothing really changed, there's a callous to a headline like that. But right now, it's still new. It's still something that prices is sensitive to, just like prices are really sensitive to hawkishness in the Fed. And they don't want to see the Fed or hear the Fed continue to beat the drum on higher rates. They want the Fed to say, yeah, we're pretty much done with this tightening cycle. And the next move will probably be a cut. Something to that. The market would love it. Equity markets would love it. And bond markets would rally also to price in lower rates. I'm not saying that's what they're going to do, but if they did do that, would you know what to do with respect to the market that you're trading? And most people would not know what to do, or not know what to do quick enough to be able to react to it. And that's all getting the check marks from the disadvantage column to the advantage column. And so today was one of those moments where in here, just calmly state that, here's a comment that could move us lower. And then it does. And so you're not surprised. If you're not surprised, you're not emotional. And then there was a moment I thought that right in here would be resistance where my cursor is. But right in here, I changed completely my mind of it being bearish because of what it had done in here. So that's the other part of trading, to put a big check mark in the advantage column, is be open-minded to admit that you're wrong here rather than up here. And a lot of people are terrible at admitting that they're wrong, and they're stubborn, and they're bearish all the way up or bullish all the way down. It's not about being right or wrong. It's about making money.